Inflation is still the number one concern. It's my number one concern for the markets, the economy. Yet the Fed says don't panic and that it's transitory. What do they mean by transitory? What's the evidence say recently? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Should you worry about inflation? Well, the Fed says don't worry about it. Even recently, they've said, and he's stammered, Jerome Powell has stammered, and I do that quite a bit in these videos. Thanks for bearing through that. But you know, he says, don't worry about it. Don't panic. This is transitory. Well, what does that mean? I'm going to define it here and then show you what's actually happening. But I don't know if you caught this. A couple weeks ago, Tyson Foods, that's right, the chicken manufacturer. And I mean, I've got 3 young kids. I almost took a picture of my freezer last night. Went down, okay, I'll tell you. Went down to get some ice cream after the kids went to bed, opened up the freezer, and we've got Tyson chicken fries, we've got boneless wings, honey barbecue boneless wings, and we've got some other Tyson chicken nuggets. I mean, this is a staple. This is like non-discretionary. You've got young kids, you need chicken fingers in your house. So Tyson, and they do all other sorts of stuff, right? Jimmy Dean, all sorts of stuff. So I would argue like this isn't discretionary spending. In a way it sort of is. It's a staple. And what did Tyson Foods say when they did their second quarter earnings call a couple weeks ago? Check this out. Tyson Foods has said that they cannot raise prices fast enough to keep up with inflation. They've raised pork prices over 35% in the quarter. That's unbelievable. Chicken and other prices up 11%. They can't keep up with inflation. Guys, I don't care what Jerome Powell says. What Tyson Foods just says, it means way more to me than what the Federal Reserve just said. It means way more to me, because if you actually read Jerome Powell's transcript or listen to his last press conference, he talks about, well, I mean, this is transitory, it's temporary. There's, most of the short-term inflationary pressures we're seeing is in vehicles and other things. That's just the supply chain shocks. That's not going to be an issue. Chicken nuggets, the maker of chicken nuggets said, we had to raise prices over 35% for pork in the last quarter, raising others 11%, 15%. That's unbelievable, but that's not all. There's one primary reason why I doubt inflation is transitory, and that's wages. Now, I'm going to get into this and show you a little bit of research, but later in that discussion from Tyson Foods, they said something that I'm seeing and I'm hearing from all sorts of other people, and that is we can't find enough people to fill the demand. Now, to me, if the supply chain shocks with cars and other things are simply because of the shutdown that happened last year, okay, that's fine. We need, as people are back to work, as people get back to work, we'll be able to catch up on the supply chain issues. But if we have more demand for workers than we have supply, then we're going to have to increase wages, which will be a sticky reason why prices will need to stay at elevated levels. So far, though, the Fed, Jerome Powell, they say it's transitory. Now, what does he mean by transitory? Everyone thought transitory meant that prices will come up and then they'll go back down. And they've changed that definition, or they've redefined it. Jerome Powell in his last address actually did say these prices, they've increased more than what he expected. Runaway inflation, someone asked that question, and he said this has been more than what he expected. And yet at the same time, he's stuck with the narrative that it's transitory. And instead of what we all expected, which was, well, prices come up and then they're going to come back down. Housing prices can't stay at this level, they'll come back down. Car prices can't stay at this level, they'll come back down. Peanut butter can't stay at this price, it'll come back down. That's not what he means by transitory. What he actually means is the level of increase, the spike in prices, it won't be able to stay at that spike. It won't be able to continue to increase at these levels. The increases will start to slow, even though they won't go back down. That's what he actually means. That concerns me. Take a look at what inflation's actually been recently. We've got core inflation. What is this? The core inflation year over year, 6.23%. That is unbelievable. Producer prices in the U.S. increased 7.7% over the past year. Guys, that's incredible, okay? And to me, anything but transitory. Why is that a problem? If we see prices continue to increase at these levels or anywhere close to these levels, even if they redefine transitory again and, well, the consumer prices aren't going to increase at 10%. They'll be increasing at 5, 6, 7% the way that they have done. If that's what they redefine it to mean, what's the problem with that? It will force the Federal Reserve to make a change to their policy. It will force the Federal Reserve to do something that they didn't actually want to do, and that is to either this is the thing, slow down how much they're helping the economy, or begin to put the brakes on the economy. It will force the Fed to do something it's unwilling to do. And to me, if you saw yesterday's video about the market being unsustainable, that would potentially be very hazardous in the short term to the stock market. So again, to me, the reason why I would argue it's hard to believe that inflation is transitory is because of the effect that it's eventually going to have on wages. I don't know about you, but my guess is the average worker, as they see their wages go up, as they see salary potential go up, it's not going to be easy for that to come back down. We'd all love to see car prices come back down or housing prices come back down, but wages, once we have to start raising wages, it's going to be difficult for that to come back down. There's been so much talk about $15 an hour minimum wage, and yet so many retailers, so many employers have increased the minimum that they're paying up to that $15 an hour. In order to reduce inflation, do you see them bringing that back down from 15 to 10? I don't think so. Take a look at this chart. We now have more job openings in the U.S. than we've ever had. I'm hearing, and it's anecdotal because it's just my area, okay? But we heard it also from Tyson. We're hearing it from other Fortune 500 companies as they're reporting earnings. They can't find enough workers. They can't find enough employees. So what happens, and not all of you are economics majors and experts, but what happens when we have way too much demand and very little supply? So we need a lot of workers, but we only have a few. They're going to have to start paying people more, offering more incentives. I don't know if you listen to radio. We're on the radio, the Wise Money Show's on the radio. We've got other features on the radio as well, so I still listen to radio. I mean, you can't go listening to the radio and going through a segment on commercials where, you know, they before they get back to talk or before they get back to music, what do they run, like 5 commercials, something like that? You can't get through 5 commercials without hearing one about an employer advertising their jobs available. And normally I would hear a couple of those at the same time. That's unbelievable. That's unprecedented. We have an issue trying to attract workers back to work. And when there's an increase in demand and very little supply, that's going to put upward pressure on wages. Now, that's a welcome sign. It is. And yet at the same time, what's that going to do to prices? To me, it's going to put pressure on prices for companies to continue to keep those prices high. It's also going to put pressure on profits, corporate earnings, both of those very damaging to the stock market. Okay, so we'll see. We'll see if this inflation continues at this rate. I mean, there are some positive signs out there. Lumber prices have come back down below where they were before the surge. Other areas, prices have come back down to normal. To me, it's not about those commodity prices. It's more about the workers' wages. That's That's more sticky inflation, and I'm watchful for that. Your financial life, is your financial life set up in a way that whether we have high inflation, low inflation, whether it's transitory, whether it's not, are you set up to succeed in your financial life? That's the job of your CFP. Work with your CFP on that. If you don't have one, you can contact one on my team. Find us online, korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there. Send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.